Welcome back to the channel, everybody. Thank you so much for joining me and allowing me to continue to be your daily advocate. If you're new here or you're not subscribed for any reason, please do me a huge favor and hit the subscribe button. Thank you to all of you who have been watching and following me for so long. It truly means a lot, and I'm glad that I can be this person.
Just after the Dow Jones hit its all-time high, it has witnessed a bit of a correction. With how everything is unfolding, we might soon expect a massive, catastrophic implosion in the stock market since the Great Depression. But with the government's intervention and more inflation in the market, there's a chance we could get one more good pump before the crash. To get us started here, we have an interesting tweet from Steve Hanke, an economist at Johns Hopkins, that says the break-even CPI rate for 10 years, TIPS, a key U.S. inflation gauge, reached a record 2.785%. Investors are right to expect higher inflation. People are finally realizing that thanks to excessive money growth, inflation will be persistent, not temporary. Referencing back to the Dow Jones graph, what actually happened over the last couple of months is that the rise in interest rates has reflected back on the market. If you can all remember, back on March 2nd, Jerome Powell made some comments in a meeting saying that it's possible the inflation could go higher. This transitory inflation call may seem like the worst call in the history of the Federal Reserve, but in truth, it may appear so on the surface level. But this could have been perfectly orchestrated by the government and the Fed to help soak up the enormous debt the government has thrown to the people. It could be they purposefully let the whole thing run hot using that transitory label to quell Wall Street and the masses. The sell-off that happened came in the stock market after the Fed announced the potential interest rate hikes. That mini crash that just happened in the stock market might be the extra room the market needs to blow off the top. Just yesterday, we saw Bitcoin run up a notch. And I believe next, we will have massive market movements in the altcoin market. But of course, these will be the altcoins that are regulatory compliant and are a bit friendlier to the environment. But even as we wait for the huge good things to happen, we need to be a bit careful. The cyber attacks, they're looming, and the rate of blackouts is going up every day. According to a tweet by Crypto Whale, massive outage hits dozens of websites offline, including Spotify, Discord, Facebook, Amazon, Cloudflare, Instagram, Wikipedia, Google, YouTube, Snapchat, App Store, Netflix, Chase, TikTok. Especially over the last 2 years, these blackouts have been happening a lot. But you know what? These are coordinated outages, and they have been happening for some time now. Last year in December, we had some exclusive IMF news on NASDAQ talking about how 10 countries simulated a cyber attack on the global financial system. I bet such simulations are so that they can pick out the resilient digital assets that could be picked out to be part of the new digital system. You all need to know that there will be certain cryptos that will be picked out as a part of the new global financial system. What they're doing right now is just putting some predictive programming in your minds so that you're ready for what's about to come. Away from all that, let's talk a little bit about what's going on with Russia. Well, as we can all see, they have been making some pretty strategic moves in the midst of what's happening right now. 10 countries simulated a cyber attack on the global financial system. I bet such simulations are so that they can pick out the resilient digital assets that could be picked out to be part of the new digital system. You all need to know that there will be certain cryptos that will be picked out as a part of the new global financial system. What they're doing right now is just putting some predictive programming in your minds so that you're ready for what's about to come. Away from all that, let's talk a little bit about what's going on with Russia. Well, as we can all see, they have been making some pretty strategic moves in the midst of what's happening right now. This is a tweet from Cointelegraph, and it says, Russia's VTB Bank, PJSC, is offering a Chinese yuan savings account with a maximum interest rate of 8%. Things continue to develop quickly between Russia and China. Also, another tweet about these two countries: China is considering buying or increasing stakes in Russian energy and commodities companies. Russian banks are rushing to switch to the Chinese card system. You all have to be alert and watch closely as these narratives play out. What is happening here between Russia and China is a massive move that will eventually have a huge impact on the global economy. On the other hand, the United States has banned imports of Russian oil, liquefied natural gas, and coal. I don't know if you can see what is happening here, but oh my, these moves will have drastic ripple effects on the global economy. Far from that, Just the other day, we had the Kentucky Teachers Retirement Fund that lost $3 in selling investments in a Russian bank. Sberbank saw its share fall 95% after the bank announced it was pulling off the European market. Believe it or not, we are at a point in history where we are almost reaching a Lehman Brothers kind of situation, if you don't know what I'm talking about. In 2008, the Lehman Brothers caused a catastrophic effect on the entire global financial system after they crashed into bankruptcy. The only difference between the two scenarios is that in 2022, as much as we may not want to accept it, Russia is a global financial superpower, and that is going to be our Lehman Brothers. So what do you think will come from that? Russia will soon go into hyperinflation, and we can only imagine what will happen as a direct consequence of all this. All right, time to take a look at the data. First with XRP. Ripple and XRP still waiting for dispute resolution with the SEC. Some lawyers and experts believe in April of this year, but the chart is waiting for the breakout on price action and OBV. On the RSI, the breakout to the downside might get a fake out. Another fractal analysis now on Bitcoin. This time I compare today's price action on the one-day time frame versus the February to April 2020 price action on the 12-hour time frame. The reason for the difference between the time frames is the rate of variability due to the COVID flash crash of March 2020 and the equally fast and impressive recovery of the global markets due to the enormous money printing in the form of economic rescue packages. Things evolved much faster in 2020. As you see, both in RSI terms and other indicators, the MA50, MA200, golden, and death crosses, the two fractals are very similar. If we ignore the irregularity of the one-week meltdown in mid-March, the 2020 triangle was a market bottom formation. The market accumulated after the economic reassurances by the Fed and the U.S. government in the form of this triangle. And after a break above the MA50, that was the blue trend line, Bitcoin broke above the lower highs top of the pattern. After it retested the top and the MA50 as a support and held, the Ichimoku cloud turned green and then entered an aggressive multi-month parabolic rally, which never looked back. Right now, Bitcoin is still accumulating within the triangle around the daily MA50, but with the Ichimoku cloud just turning green. Do you think this is a sign of bottoming? Will a break above the triangle set in motion a rally similar to the April-May 2020 timeframe? Hey, you can always let me know what you think in the comment section below. Guys, always do your own research, trade safely, stay safe, and continued prayers for the people of Ukraine.
So enjoy your day, everybody. I'm always here for you. Leave any comments or questions below, and be sure to subscribe. But thanks, everybody. I really appreciate you. Enjoy your day, and I always have your back. So thanks so much, everybody.